which performed beautifully. It created a displacement candle, which it also did. I put in a note in the chat to keep an eye on the 15-minute fair value gap, which I hit the bat long again to retarget the sell zone up here and these equal highs that were up here, the Asia high. Now for today, we're going to be waiting to see what's going to happen. I'm not expecting the entire gap to get filled because I have a bullish bias. However, we can expect them to fill at least the upper portion of it or the top half of it. So to make it a little bit easier, I'm going to put in a tool on my chart. So I don't have to draw that all out because it costs me a lot of time to do it. So when the market opens up in a bit, we should be opening up with a 94, 95 point gap. However, what I'm expecting is these equal highs to be taken out. Now, I want to add another element to it. Yesterday, I posted to you guys that I was going to go long and hold it for the Asian session to trade back into premium. What is premium? It's above the previous day equilibrium. So if we were going to go down and get short, you would want to do that in premium and not in discount. So sure, you can scalp up and down in here, but you have to be very, very, very nimble with your expectations because odds are against you for looking for shorts in here. And as you can see, it lived up to its word. Of course, sure, you can take a short to the Asian session low, high, and those kind of things to target specific areas. However, they're short-lived because if they want to distribute their funds, they would do that high. You buy low, you sell high. Simple like that. So we're going to, let me just put this back on regular trading hours. So we have the close marked. The settle is right here, but I'm going to mark the close right here. Let's see where we are trading right now, 2086. So it's the New York AIM session low, and we're just going to draw a little box from where we close to wherever price is, and now we're going to take the electronic trading hour thing out. Right here. What kind of alignments do we have? If we go to mid gap, remember my attention was drawn to telling you guys, keep an eye on that hourly fair value gap. Okay, we're going to take that little box off. As you can see, it also respected that box in the London session where you can sell it and ping pong it. I do not use them again in the New York session. Especially when they've been broken out. These are average daily ranges that are a lot of times valid in the London session. However, coincidentally, it does create a low of the day sometimes in them. But that's okay. There's plenty of opportunities to get in. As you can see right now, we're 3 minutes before the market opens and they're pushing it up back into premium, which is a good way for longs to distribute. We're going to drop down to a 1 minute chart, see what we're getting here. We keep moving the goalpost up until when the market opens up. And you notice this white yellow or this white arrow right here is the mid of whatever is there. Now we have that new day opening gap which hasn't been tested. So price can completely fill that gap up, trap people short, and go up. Now we have time to be doing that, all of this and taking the opposite direction. Because when they open up, we'd like price to take out these highs, accumulate, drop it back down, reaccumulate down here, and then replace us back to the upside. Option number 2 is if we're bearish and we're going to go retarget these previous day lows, or either a session low, which is right here. I want to keep my eyes on this Asian session high, because as soon as we get 5-minute or 15-minute closures underneath the Asian session high, we can start to retarget the Asia low and the previous day low. But that's not the issue. Now, if it starts running at the open without looking back, too bad. It's an opportunity that I've missed. I do not like trading or initiating positions at highs, even though on a higher time frame we are at a discount. But end of the run liquidity is on there. I would prefer to see something occur like this, where we go up and then create a fair value gap where we can then retarget that. So I'm not making a decision based on here that we're just gonna a gap and go, because that's a rare occasion. Odds are not in your favor, but the position will continue to go in your favor for very long. I'm opening up the chat real quick to see for a change in bias on that weekly fair value gap. What do you mean optimize? So market's opening up in 10 seconds or 20 seconds. I'm gonna take this off. There will be a box popping up on my screen. Oh. And it will show you let me take this one off. Yeah. And it will show you a line where, here we go. You see, this is the mid version of it. So you can expect price to trade back into that mid approximately. I prefer it to trade into that bearish or in this bullish or value gap right here.